As per this report, we got two zones, as I told you earlier. The first zone is, this is the one. This is Cholamandalam Finance. This is having and the time frame is 75 minutes. This is a 75 minutes high priority, high liquidity zone. S underscore DZ. S underscore DZ and R underscore SZ, they are the powerful high liquidity zones. Among all the high priority, high liquidity zones, especially daily time frame and 75 minutes time frame, this type is very, very powerful, much superior than any other high liquidity zone. So we got that zone. And when the leg-in date, this is on 3rd April 2024 at 9:15 candle. After that we have one base candle. So now let's open this chart, Cholamandalam Finance on 3rd, 4th, 9:15 leg-in candle. Let us track. This is Cholamandalam Finance. This is 75 minutes high liquidity zone we need to draw. Look into this candle. This is 3rd April at 9:15. See here, 3rd April 9:15, and we have one base candle. So let us draw the zone. Okay, let me give very light color. So this is a 75 minutes high liquidity zone. And this is the one identified by our software. Why? Because the previous day, this was the closing. This is the last candle on 10th April. So this is near to the 75 minutes demand zone. So our software identified this stock. Now what you have to do, we need to fine tune this zone till the 5 minutes level. And we need to identify a fresh fine tuned 5 minute zone. So I am changing the time frame to 15 minutes time frame. Now I should find a 15-minute zone that is overlapped with this 75-minute zone. This entire zone is a 75-minute zone. But we are in, now we changed the time frame to 15 minutes. And look into this. Here we have a leg candle and then two base candles and a rally candle. So let us draw the zone. This is a 15-minute zone. Let me increase the color thickness. Okay. Now this 15-minute zone is overlapped with 75-minute zone. This 75 minutes is a high liquidity zone. 15 minutes need not be high liquidity. It can be any zone. And we not even know whether it is a normal zone or a high liquidity zone. But a 15-minute zone is overlapped with 75-minute zone. That is what zone confluence. That is what you learned in lesson 16. So what is the next step? Now, within this 15 minutes area, we should identify a 5-minute zone. Then that 5-minute zone is called a fine-tuned 5-minute zone, because the 5-minute zone should be overlapped with 15 minutes. So I am changing the time frame to 5 minutes. Now let us look inside this 15 minutes zone. Don't look for zone outside this 15 minutes, either below or above. See, above you have a rally, base, rally. You cannot draw the zone here. If you draw the zone, that is not a fine-tuned zone. If you draw this zone, it is invalid zone. You cannot call this zone as a fine-tuned zone, because this is not overlapped with 75 minutes and also 15 minutes. So let us delete this. Now look into this. Here we have a rally, base, rally. And also we have drop, base, rally. Two zones you can identify here. Let me change the color here. This is the 15 minutes, thick color. So the one that is having a thickest color is 5 minutes. The next thick color is 15 minutes and the light color is 75 minutes. See here, the 5 minutes is overlapped with 15 minutes. 15 minutes is overlapped with 75 minutes. So that is the reason why this 5 minute zone is called fine-tuned 5 minute zone. And we have one more fine-tuned zone here, rally base rally. So let me draw this. So this is also a overlapped zone. So this 5 minutes is overlapped with 15, 15 is overlapped with 75. Now which zone you have to plan the trade? The one that is nearest to the price. This is the one, rally base rally is the nearest one to the price. So this is the area you need to plan the trade. If this is violated, after that you can again plan the next one, drop base rally. That way you can plan your trades. But anyway, previously price entered into the zone. See here, this is on 5th April. 5th April prices entered, but price did not enter into the 5 minute zone. But see the rejection before entering into this 5 minutes. That means there is a very strong order flow is there. Those people who would have kept a buffer, generally we keep some entry buffer. That is what you learned in lesson 19. Up to 0.1% generally we can add buffer. Even if you would have added just a few paisa, you would have got this trade. But still our zone is fresh. But we would have got a trade and we would have got a very good profit. See, use rejection and after that how prices moved up. But anyway, 5 minute zone is still a fresh zone. Prices didn't enter. We can plan a trade. See what happened here. Prices again came near to this. If you would have added a buffer, entry buffer, definitely this trade is executed. But what is our target? Our target is 15 minutes opposite side zone. So before prices are entering, this was the last candle closed before our trading day. Whatever you are seeing, the small base candle, the red color base candle, this was the last candle before our trading day. Our software generated the report based on this data. So if you want to plan a trade, so do we have any nearest 15 minute zone? Yes. Here we have a zone, supply zone. This could be our target. What is the RR? Let us calculate the RR also. We have a long position tool. Let me keep this. Generally what you do, you keep some entry buffer, right? 1%. So small percentage I am adding roughly. And you have stop buffer also a little below. Roughly I am just approximately I am adding, but you need to calculate in a proper way when you are planning your trade. See, we got 4.35% RR we got. Maybe a little below you would have exited somewhere like this. So 4.23 RR you will be getting. This is your trade plan. Now market started. Let me go to 1 minute time frame to get clarity, to bring some clarity. See here, prices entered inside this. You would have got a trade. But some people don't avoid trading on the 9-15 minutes candle due to some huge volatilities. But some people it is an opportunity also. See, that way you would have got a trade in case if you would have taken a trade on 9-15 candle. If you avoided, you would have missed this trade. But see, after that, it reached the target. A little above. Because generally, we exit a little before reaching this zone. That way you got the target. Or trailing stop also you can follow. Generally people what they do, they use the trailing stop also. That way also they get. Let me delete this and show you that. See here there is a rally base, rally. Very nearest to that. 1 minute trailing stop loss. This is a demand zone. You already land a trailing stop loss in lesson 19. So this is the first zone near to this. Generally when you use a trailing stop loss, you may feel prices will be going further up. It will be violated and you will get more profit. That way people use the trailing stop loss. But here unfortunately what happened? The supply is very strong. Prices didn't go. And this 1 minute zone is violated. So at the distal line, that is our stop, maybe you may add some stop buffer also below this. So you would have exited here. So maybe you would have exited here. Approximately, let me say, by adding some stop buffer. At this blue color line, you would have exited. That way you would have got very good profit. You may ask me, how much RR we captured? Let me show you. Until this blue color line, approximately. Okay, so approximately a little below blue color line, you would have captured 4.5% RR, you would have got 4.58% RR. It's excellent, right? Okay, in case you may ask, 9:15 candle I didn't take trade. So another opportunity it has provided. See again at 9 o'clock, 40 minutes candle, now prices entered inside the zone. Some people may say, I don't want to use any buffers before the zone. I want the prices to enter into my fine-tuned 5 minutes, then only I want to take a trade. Maybe at the proximal line of this fine-tuned area. You may tell that. So that way also you got a trade. Second trade, this is the second. Those people who did not miss this trade, they would have got again another trade. Those who already took this trade at 9:15 minutes candle, they would have got another second trade. This time prices entered. Because until prices enter into this zone, this 5 minute zone is a fresh zone. And moreover, sometimes if the zone width is high, more, some people plan even 2 trades in the same zone. Sometimes, some people. That possibility is also there. If you think this is the first entry and this is the second. But anyway, this is the first time prices entered really into this order flow. Now this zone is no more a fresh zone. Because prices entered into the zone. See after that again how prices are moving. So again how to plan your trade using trailing stop loss. If you are using trailing stop loss, see here this is the first demand zone. If this demand zone is violated, you will exit. Because earlier the demand is very strong, the supply is very strong, prices did not enter into this area. But now, is it going to enter up to this area? Sometimes you might be having doubt. When you have any such kind of doubts in your mind, immediately implement trailing stop loss. You already learned the topic. Next, you see another zone is created here. So now this is no more valid. And if this zone is violated, you will exit here. But another zone is created here. And if this zone is violated, you will exit here. And you will exit here. So this is no more valid. See, this is a trailing. How we are trailing, how we are adjusting the stop loss. This stop loss is not for what to say. It is not a trade stop loss. This is our profits stop. This trailing stop you are using to book your profits. Instead of booking your profits here, further it is trailed. Trailed means adjusted. Again it is further trailed. So this is what you are doing. And see the next again you have one more here. This is a drop base rally. Actually it is a ERC candle, but okay. Sometimes what you do for your profit booking point of view, you can compromise and you can draw the zone. And now this zone is violated. Here you would have exited. And this is the profit you might have captured. See the info line from here to here. So around 9 rupee 45 paisa you captured the profit from here to here. Because the price failed to reach your target. It happens, sometimes it will happen. Because already earlier prices entered up to this. In the second attempt, it couldn't move further up. Maybe the supply also become very strong in the market. Because the momentum is changing. The volatility conditions in the market are varying now. So this is how your high liquidity zone helped you capture a very good profit. How much RR you would have got here? For your second trade, some buffer, stop buffer here, and a trade here you have taken exactly in the proximal line. Oops. Because our goal is to take at this proximal line. Okay. And where you booked your profit? At this proximal, maybe a little below, because you may use some stop buffers. Let us assume you exited here. Some gap I have given. So this is the way still you captured 4.37% RR you captured 4.37 RR with the help of trailing stop. It gave you this much profit. Earlier it reached up to our target. The first trade, in case 9:15 candle, if you would not have taken, you got second opportunity at 9 o'clock 44 minutes candle, and finally exited at 10 o'clock 35 minutes candle. In less than an hour, you booked your profit. So this is how high liquidity zones will be helpful to you. Now let us look into one more example. So what happened all of a sudden? trading view become very slow. Okay, anyway, first let us look into the next chart. Next one is Havels.